Hello and welcome back to the Geordie Pig Investor channel. Today we're going to have a look at, is British American Tobacco stock a buy right now? What is British American Tobacco? Stock ticker BATS. British American Tobacco is a company that engages in the manufacture and distribution of tobacco products. The firm is a multi-category consumer goods company that provides tobacco and nicotine products. The company invests in building a portfolio of tobacco and nicotine products alongside its traditional tobacco business, including vapor products, tobacco heating products, and modern oral products. The company manages a globally integrated supply chain, and its products are distributed to retail outlets across the world. The company segments include United States of America, South America, Europe, North Africa, Asia Pacific, and the Middle East. Some key stats to do with British American Tobacco. They are based in the United Kingdom. They are obviously in the tobacco industry, have a market cap of 61.2 billion. They went public in 1962, have over 50,000 current employees, have an 8-year dividend growth streak, a 2.91 5-year dividend growth rate, and a massive 8.6% dividend yield. Over the last month, we can see British American Tobacco has dipped quite considerably, being down 4.31%. And in today's video, we're going to have a look if it's a buy, hold, or sell right now. British American Tobacco's earnings call and fundamental analysis. British American Tobacco said its first half performance of 2024 was in line with its expectations and indicated that it is on track to deliver its full year guidance. BATS also reported a 5.7% rise in pre-tax profit to 5.6 billion for the first half of 2024 from 5.3 billion a year earlier, boosted by profit from associates and joint ventures. The numbers are very good for the associates and joint ventures as the share of post-tax results surged to 1.65 billion from a measly 289 million. However, revenue fell by 8.2% to 12.34 billion from 13.44 billion, driven by the sales of businesses in Russia and Belarus in September 2023, and this is still having an impact today. Revenue from new categories was also down 0.4% to 1.65 billion, but BATS expects to deliver improvements in revenue and profitability across its new categories for the full year. British American Tobacco declared an interim dividend of 235.52 pence, which is up 2% from the 230.9 pence it had previously. The company said it has agreed to buy back shares from Goldman Sachs International over the next few weeks and has already repurchased over 106,000 shares at an average price of £25.69 from UBS on Wednesday. Fundamental analysis. They have a positive free cash flow at 10.3 billion. Low debt to equity at 0.61, positive operating income at 10.9 billion, positive gross profit at 21.6 billion, positive ROIC at 8%. They have very good long-term solvency, but not the best short-term solvency right now in the company. They have an average interest coverage at 6.05, a low Altman Z score at 1.22, negative net income at negative 13.8 billion, and a positive net debt at 26.2 billion. But in the next slide, I'll go into this a little bit further and discuss why they have such a high positive net debt right now. British American Tobacco's free cash flow. Free cash flow is the money a company has left over after it's paid for all of its expenses and any investments it needs to make to keep the company running smoothly. Free cash flow has a massive impact on the direction the company may be heading, as if a company has negative free cash flow, this is really going to impact the company and what they can actually do within the company by paying dividends, buying back shares, and future prospects for the company are not going to look as good. You always want to be seeing a positive free cash flow and, in an ideal world, a growing free cash flow within a company. From this graph, you can see that BATS has had a relatively steady free cash flow over the last couple of years and has saw a massive increase compared to the earlier days in 2017-2018. BATS currently has a payout ratio of negative 35%, but this is because it took on a 27.3 billion write-down on its US brands, and this was following the acquisition of Reynolds America, which significantly affected its profitability, but we can see that the free cash flow payout ratio still sits at a healthy 49%, which is what we are personally going to be mainly focused on as a true reflection for a dividend company. British American Tobacco's discounted cash flow valuation. The DCF is a method of estimating the current value of a company based on projected future cash flows, adjusted for the time value of money. The DCF valuation process calculates the present value of a company's forecasted cash flow based on selected operating models. A reminder that British American Tobacco's current price is 2,707 GBX. When plugging in a discounted rate at 7.4% and a terminal growth rate at negative 2.7%, we can see that British American Tobacco is valued at 3,684 GBX, which is an undervaluation of 27%. When plugging in a discounted rate at 7% and a terminal growth rate at 0%, we can see that British American Tobacco will be worth 5,700 771 GBX, an undervaluation of 53%. And when plugging in a discount rate at 6.7% with a terminal growth rate at plus 2.7%, we can see they would be valued at 12,058 GBX, a massive undervaluation at 78%. I not only have a look at the DCF valuation, but also the relative valuation. The relative valuation is a method used to value a company by comparing it to other competitors based on certain metrics. The metrics it includes is EV to revenue, EV to EBITDA, and PE ratios. You can actually use many other different types of metrics and swap them in and out to get different relative valuations for different companies. These are the main three that I stick to and use when I'm valuing my companies. The worst case scenario, British American Tobacco was valued at 3,537 GBX, which is an undervaluation of 23%. The base case scenario being worth 3,919 GBX, an undervaluation of 31%, and the best case scenario being worth 4,419 GBX, an undervaluation of 39%. From this, by adding the two together, we can get something called the intrinsic value. The intrinsic value of a stock has been used for many years to calculate stocks, and it is easily calculated by adding the two together and then dividing by 2. The intrinsic value's worst case scenario would be worth 3,610 GBX, average case being worth 4,845 GBX, and the best case being worth 8,238 GBX. The third valuation method that I use when valuing a company is the Wall Street estimates. Wall Street estimates are an average estimation of a public company's quarterly earnings and revenue that leads to a valuation of that particular company. These numbers are forecasted by a company-specific analyst who provides research on that particular company and therefore comes with what they believe is an accurate valuation for that company. A company the size of British American Tobacco is going to have multiple analysts going through the company on a day-to-day basis to come up with these values, hence why I do believe that these values are fairly accurate and ones that I like to take into my valuation of a company. On the worst case scenario, the Wall Street estimates believe that the 1 year price target for British American Tobacco is 2,828 GBX, which is a 4% upside. On the average case scenario, they believe it would be worth 3,210 GBX, which is a 19% upside. And on the best case scenario, they believe it would be worth 4,620 GBX, which is a massive 71% upside. Overall, as I've mentioned before, British American Tobacco's current price is £27.07. We can now combine all three of our valuations to come up with the worst, average and best case scenario for British American Tobacco. On the worst case, they would be worth £33.50. So with a 10% margin of safety, you'd be looking to buy at £30.15. And with a 20% margin of safety, you'd be looking to buy at £26.80. On the average case, it's worth £43, so with a 10% margin of safety, you'd be looking to buy at £38.70, and with a 20% margin of safety, you'd be looking to buy at £34.40. Finally, we've got the best case scenario, which is a crazy valuation being worth £70.32, so with a 10% margin of safety, you'd be looking to buy at £63.29, and with a 20% margin of safety, you'd be looking to buy at £56.26. What does this mean for British American Tobacco? Is the stock a buy right now? I think right now British American Tobacco are at a relatively attractive price. When comparing the current price to the valuations, you can see that on the worst case scenario with a 10% margin of safety, it would still be classed as undervalued, which is a very promising sign. For a dividend investor, British American Tobacco has a very attractive dividend yield at over 8%, and it also has over 8 years of increasing that dividend payment. Their 5-year growth rate is on the lower side at just under 3%, but when the dividend is so high, I think as long as in your portfolio you have a good mix of growth stocks alongside certain stocks like BATs that have a higher paying dividend yield currently, then you'll have absolutely no problem including this in your portfolio. Especially if you're based in the UK and purchase this through an ISA account, as you'll receive the great tax benefits of not having to pay any tax at all on the dividends you receive on this company. And also, if you ever do sell out of this company for a big profit, you will also not pay any tax if it is in an ISA account. If you're worried about their high dividend yield being somewhat of a trap, I think that their payout ratio being under 50% solidifies the fact that it's definitely not a trap and should give you somewhat peace of mind. I hope you enjoyed today's video. What other stocks would you like to see a stock analysis on? Let me know in the comment section down below. Do you currently own BATs in your portfolio, or are you looking to add BATs, and at what sort of price? Please like and subscribe. Thanks for watching. This is the Geordie Pig Investor, over and out.